Hi, I'm Pattu from freefincal. In this video, let's talk about the rolling returns of Nifty versus Nifty Next 50 versus Nifty Midcap 150 and finally Nifty Smallcap 250. So let's dive straight into the 5-year data. So the green is the Nifty Next 50 and the yellow is the Nifty 50. And you can see recently the 5-year returns of the Nifty Next 50 have been below that of the Nifty 50. For the longest period, it has been below that of the Nifty 50, but it has recently, the gap has closed and it's almost equal to that of the Nifty 50. So in this graph, there are 3,955 data points in each colored line. So there are 3,955 5-year return data points. And you can see that the Nifty Next 50 has underperformed for the longest period. So this is the reason why people keep saying that the past performance is not a guarantee of future performance, because whatever you do in the past, you don't know how the future is going to be, and why you should not assign probabilities to the stock market. I will talk about that in another video. But this has been underwater for the longest period, but it is now finally catching up. Now, this is Nifty Midcap 150 versus Nifty Next 50. The Midcap 150 is in pink. The Nifty Next 50 is in yellow. You can see that for almost its entire history up until October 2021 or so, the Nifty Midcap 150 has been more or less giving returns similar to that of the Nifty Next 50. Only after that it has outperformed, and in the last few months the outperformance has been very high. This means that this kind of outperformance is very unlikely to last. So you can't just look at this graph and say, oh, I'm going to invest in Nifty Midcap 150 now. You have to give it some time to see how things go and so on. Does this mean that the Nifty Next 50 has become less volatile and therefore less rewarding? Possibly, because of higher market participation. It is possible that is the case, but we need, of course, more data to confirm this. But it is of course, it's a good idea that, I mean, it's good news that Nifty Next 50 is less volatile. Of course, it is slightly more volatile than Nifty Next 50. Nifty Next 50 is slightly more volatile than the Nifty 50, excuse me, but it looks like probably that the volatility of the Nifty Next 50 has become a little bit lower than the Nifty Midcap 150, and therefore its reward is also a little bit lower. But we need time. We can't look at this and make any conclusions. I am still in favor of holding the Nifty Next 50. I'm not in favor of investing in a Nifty Midcap 150 index fund because there are too many stocks. It's difficult to track, and in the time of a crisis and a prolonged downturn, etc., then the liquidity will be a problem in the mid cap segment. So I'm still in favor of investing in the Nifty Next 50 indices. But of course, the problem with investors is they just look at the recent performance and invest. So that you cannot do anything about. Next, we add the Nifty Small Cap 250 to this graph, that is in green. Notice that the Nifty Small Cap 250 has typically always underperformed the Nifty Midcap 150. This is the reason why I benchmark the actively managed small cap funds with respect to mid cap 150 and not small cap 250. Small cap 250 is a very easy index to beat. You must beat a tough index if you want to charge 2% expense ratio. And only in the last few months, the Nifty small cap index has outperformed the Nifty Next 50. Again, I don't think that is going to last too long. So the same data for 10 years. Over 10 years, you can see that the Nifty Next 50 in green now has kept its head above that of Nifty 50. Over 10 years, you have 2,720 data points. But of course, sometimes the outperformance is spectacular, sometimes the outperformance is not so spectacular. Most of the Nifty Next 50 fans were formed in this period where the Nifty Next 50 performance was very, very good compared to Nifty 50. But after the performance dropped, they kind of became frustrated with it. And, that's how it will be. You have to appreciate that if you're going to take more risk, then you have to face through uh, the period of downturns. More risk does not mean more reward all the time. The reward will be sometimes higher, sometimes not. Now we look at Nifty Midcap 150 in pink versus Nifty Next 50 in yellow. Again, only after October 2021 or so, maybe a little bit before that, it is the outperformance is seen, and it has been very high in the last few months. Again, I don't think that's going to last. It's not going to be the same all the time. Even over 10 years, if you add the small cap 250 data, the small cap has always underperformed the Nifty Midcap 150. And that is why I keep saying stop investing in active small cap funds, because if you compare the active small cap funds with Nifty Midcap 150, not many funds qualify as consistent performers. You can use our screeners to see this. So that's it. So again, I don't see any reason why one should ditch the Nifty Next 50. We should have some faith in it. Of course, there will be periods where other things outperform, but just every time something outperforms, you can't run behind that, and then you will only leave your portfolio in extreme clutter. So things are changing. We have to see whether the market dynamics has changed enough that the Nifty Next 50 is going to become slightly more large capish than it was earlier. It is still not completely large capish, because if you if you consider the impact costs, that is the cost of buying and selling large volume of stocks, only for the top 10 or top 15 stocks of the Nifty 100, the impact costs are very small. The liquidity is the highest there. After that, the liquidity drops rapidly, and that is the reason why I say stay away from mid cap and small cap index funds, because the liquidity is so low, the tracking errors will be high, and when there's a market downturn, these funds will struggle to keep pace with the index. And of course, with respect to active funds, they don't not enough of them are able to beat the Nifty Midcap 150, and that is the reason why I say avoid them as well. Bye bye.